bearish day in the SPY today in the S&P 500. We have this big Clifford candle right here, this big red candle, and it broke down from our support line right here, as you can see on this blue level. So where is the bottom gonna be at? Let's talk about it. What's up, everybody? Welcome to my YouTube channel. I am the Chartist, and I always tell you guys to be a bull in the bull market, but it's tough to be a bull when you don't know where the bottom is, right? You don't want to call a bottom. This is why we use technical analysis to help us figure out and identify possible entries, but you always set your risk, manage your stop loss, okay? So yesterday I said that I am going to be bullish, right? I'm going to be bullish on the SPY, and why not? It came down to a support level, do a nice low fake out, taking out the area of liquidity. That was yesterday, this candle right here. And we saw some buying pressure, and I was expecting it to go, and I wanted to watch if it could stay above 448 today. And we did not get that, okay? However, it did open around that level, so I bought some calls around here around the 445 to 444 level. So right at open, I sold. It hit my stop loss. I was hoping it went up higher to 457, or at least head to on his way there, but it did not, okay? So luckily for me, I was able to take some profit, but for anybody else that continue to hold, might not be looking too good, right? So looking at this price action now, it's pretty bearish, guys. It's bearish price action. There's many days closed below the 5-day. That's 4 days closed below the 5-day moving average. 5-day cross below the 13. It's starting to cross below the 20. That's 3 days in a row below the 20. So of course we gotta watch our next support level, which is here at the 50-day moving average. Okay, there's a chance by tomorrow that the moving average of the 50-day could move up just a little bit tomorrow. So keep in mind, these moving averages, they change each day, guys. They are moving average, you know, math and all that happy stuff. Okay, so 50-day moving average is here at 441.96. Okay, that's a support level. And of course we have this nice support level over here down at 438. This red zone right here is our AOL, area of liquidity, where market makers could fake out the bulls. All right, we zoom out a little bit. It's this support line started here on May 19. Got a touch there. We're looking for that third touch. Okay, now be careful with the third touch. The third touch, maybe the fourth touch and higher. That's when the market makers look to fake us out. The reason is because they kind of established the trend already, or the support level already. So we're gonna have a lot of people watching this support level. Okay, so it's either gonna break below it, taking out the stop loss. It's either gonna bounce right off of it, or it might not even reach it, because a lot of people are expecting it to touch. Okay, so keep in mind those three scenarios. All right, but one thing I have in common is that they're all heading down. Yes, I'm kind of bearish on the SPY right now. Okay, but there's a chance that we get a relief rally tomorrow. Okay, it goes down, and broke the support level breakdown. So we want to see is a confirmation. So just like with a breakout, we want to see it head back up, retest that resistant level. That was used to be a previous support level, retested as a resistant level, and then head back down. That's a confirmation right there to let us know that we're going to see more downside. Okay, so 440. Let me see, 446 to the 447 level. That's if you're a bear, that's where you might want to enter your short positions, or buying a put, or whatever your strategy is. Okay, because that's our resistant level. As long as SPY's below that, I think I'm bearish on it, and we're gonna see more downside. Okay, see if we get a bounce there. Maybe right here, 438 to the 442 range could be a good buy zone. Keep in mind we have a triple bottom right here, 1, 2, 3, and it could come break this level 438 and head even lower into the AOL, and it might even be another test right here at this level for the fourth time. Okay, so that's a possibility as well. Okay, so for me, 442 to 438, even 436 would be the buy zone if you're a bull. Okay. Now, the last time, keep in mind, this is 4 candles in a row, 4 red candles. The last time we had 4 red candles was right here, 1, 2, 3, 4, and then we had a green day the next time, okay? So usually when SPY gets the fourth candle, it doesn't happen often, but when there's 4 red days like this, the fifth day is usually a green day. Another time we had 4 candles. This is 3. I think it was back in October of 2020. This October, right here, October, we have 1, 2, 3, 4. Next day was a green candle. 1, 2, 3, 4. Next day was a green candle. Okay, so we could get a relief rally tomorrow. Okay, because we have 4 red days in a row. Alright, let's take a look at VIX. Keep in mind the VIX is trading about the 5, the 20, 13, and 50. Kind of bullish price action is building up. And of course, we got this support level that's sloping upwards, which is that's a bullish support level right there. It's been bouncing. However, still trading below the 200-day moving average. Okay, so definitely keep an eye on that. The 200-day is currently at $20. If the VIX is above $20, that's very bearish for SPY, and it could head up and test this resistance level around 23.60. And if it breaks that, there's another resistance at 27.47 for VIX. That's very. If that happens, that's bullish. I mean, bearish for SPY. But definitely watch this 200-day moving average. All right, it's currently, that's bearish price action for VIX. Okay, so as long as it's staying below $20, $20, this could look like a buy the dip opportunity. Okay, now let's go to a 1 hour chart. Here's a 1 hour chart. You can see here, okay, that I mentioned yesterday that we had a gap. See this gap around 443.50 to the 444.75. Okay, and I mentioned yesterday, which was here, that we kind of filled the gap, but it could have been better. Okay, now today we fully 100% filled the gap. Okay, but like I said, we got resistance right here based on the 200-day moving average. I mean, the 1 hour chart. We need to get back above the 200-day moving averages at 449.77.80 to look bullish again. All right, but it did break down this support level right here. All right, so below 445 is very bearish. Okay, guys, so definitely on the next buy zone, like I said, it's between 442 to 438, possibly even 436. Okay, so right now, with all this price action going on, I am bearish on the SPY. I say wait for to get to a good buy zone below the 50 to this support level right here. Okay, that's a good buy zone. I'm gonna say it again, 436 to 442. If you're buying calls, give yourself enough time. I recommend 30 to 45 days out. If you got enough money, even three months out. Okay, don't do them weeklies. I'm not a big fan of the weeklies. I mean, it's up to you. More risk, more rewards. Up to you. I'd rather recommend us be safe about this because this is money we're talking about. Okay. All right. So short-term bearish on the SPY, but because I'm still a bull. I don't want y'all to think I'm a bear now. I'm a bull. Even though I'm short-term bearish on the SPY, that means I'm still looking for buying opportunities off of one of our critical support levels. Okay. So 442. to 436 is my buy zone. That's why I'll be looking to enter. Okay, guys? I'll be scaling in. All right, so that is SPY. Moving on to TripleQ. TripleQ, well, it closed right at our critical support level, right at the 20-day moving average. It went just below. So potential double bottom right here, okay? Potential double bottom. And we broke out of the range. It retested that level of the range that it broke out of and gave that confirmation that it's heading low. And look, that's exactly what happened, okay? But it did close just above the 20-day moving average, okay? So if it closed below that, our next support is all the way down here at 368.70, okay? So as of right now, it's looking like a buy the dip still. All right, this could be a double bottom potential, okay? So definitely watch that level, see if it stays hold, okay? It continue to hold. 375 or higher, I'm bullish on TripleQ. Below 375, I'm bearish. Now I would look to enter at the 368 to 365 range. Okay, that will be my next buy zone for it. Okay, so if you're a bear, this could be a chance for y'all to make some money. Okay, but I'm not a bear. I'm gonna continue to be a bull because overall this is a bullish market. So I look to buy buying opportunities. Look for buying opportunities. Okay, so I'm gonna say that one more time. Above 375, I'm bullish on TripleQ. Below 375, I'm short-term bearish on TripleQ, and I look to enter at 368 to the 365 range. Okay, moving on to ARKK. Straight up, I am bearish on ARKK. Had this breakout, and it came back down. False breakout, and it confirmed the false breakout. It came to test right here. This is where the breakout line was. It retested it, failed to get back above. It continued to close lower. Okay, so I'm bearish. I think we'll have more downside. Probably head down to the 113 to 110 level, possibly even lower. Okay, because I want y'all to take a look at Tesla. This is a daily chart of Tesla. I know a lot of people were bullish on it. Okay, but I think, and this is a big I think, that Tesla could be heading to more downside. Okay, the reason is, if you look at this, you notice these initials. That's based off of the Wickoff's accumulation. Okay, let me move these moving averages so you can see clearly. It's based off of Wickoff's accumulation. Okay, here's Wickoff's accumulation right here. Okay, so I think we are in phase B, at the top of phase B. You guys can look this up yourself and compare it. Okay, I think Tesla is at the tippy top of phase B. I think that's where we are. And if you see here the tippy top of phase B, it's gonna head down for more downside. Okay, so this area right here is supposed to be a big bull trap to get y'all thinking Tesla's going up forever. Okay, now if you look at it from a technical perspective, it's trading under the 5-day moving average for the second day in a row. Matter of fact, it's for the third day in a row. Right here, it broke down. It came back and attempted, let me make it bigger. It attempted to get back above, but it failed. It couldn't hold back above, okay? And the 13-day moving average is acting as support, okay? But based on Wickoff's accumulation, we could see more downside with Tesla, okay? And Tesla is about 9 to 10% of ARKK's holding. So if Tesla is bearish, we could see a lot more downside to ARKK, okay? And it's already looking like it wants to head down lower. Alright, so I am bearish on ARKK. We have resistance here around 119, 121, a big resistance level here at 124. So since I'm bearish, I'm looking for selling opportunities, and instead of entering around support levels, I'll be looking to enter around resistance level. And I just let you know the resistance level, and we could head down to the 113 to 110 zone. Okay, we had triple bottom right here, so that means just under it, it's an area of liquidity. Okay, so moving on to Bitcoin. This is what I got on Bitcoin. Bitcoin's at 46.6K. I got Bitcoin following Wickoff's accumulation as well, and I got it in phase D. This is where Bitcoin is at, phase D. Okay, so it's gonna get choppy around phase D, but it's still holding. And if I combine that theory with Elliott wave, got wave 1, 2, 3, 4. Looks like Bitcoin is finishing wave 4. We could head up to wave 5, and I got a 59K price target on Bitcoin. Okay, so with that being said, I am bullish on Bitcoin. Okay, buy this dip, y'all. All right, so that's what I got today. I hope this was able to help you guys to stay calm in this crazy market, and I'll see you all soon.